Hi, it's Doc for the 12-Minute Trading Market Minute for Sunday, the 28th of August. Does Friday's sell-off mean that the bear is back? Let's look at the charts and find out. I'm going to start out today's video by giving you a little bit of background on what it's like to go through a true bear market. We've really only been through two of these over the last 20 to 22 years or so. And the first one of these started in 2000. And the first leg of this bear dropped about 30%. And this was, at that point, check, you can say, yep, we're in a bear market, but it was not over yet. And in my mind, bear markets are really kind of comprised of three things here. There's the initial move down. There's the second move up, which is a monthly lower high and gives everybody the thought that it's all over and good times are ahead. The market's going to recover after that point. As you can see, things just get worse after this as we start to dive into these really desperate lower lows, super strong rallies that come back up, and then the worst selling always occurs down at the very end. Now, in this case, the first phase dropped about 30% before it went on these huge monthly rallies that went on for weeks before they topped out and then led to more selling. And you can see this selling was almost like exponential as it drops. It's a waterfall decline as they come back down. And then this one was particularly bad because it took a triple bottom before it started to really rise. And you can see what really delineated this is not only the break of the trend line here, but also the 200-day moving average. And of course, the price moving into printing a series of higher highs and higher lows, which it had not done before that point. So this is one example of a bear market. This is a classic example. The next one that we got was 2007 through 2009. And you can see that kind of the same thing happened here, although they're always going to be different. Here's the first phase of this. The first phase of this took about 6 months, dropped about 20%, and then we rallied up to a monthly lower high. Once again, everybody was convinced that it was all over with and good times were ahead. And then you can see that it fell into the third phase of this, which is the strongest selling always occurs at the very end. So you can see these phases here, the first phase, second phase, basically to fake everybody out, and then utter devastation after that. So now let's go out to today's chart and take a look at this. Again, this is just on the daily chart. Where are we? Well, we've dropped somewhere around 20 to 21% to the downside on the S&P, and we rallied up to what is clearly so far a monthly lower high. And Friday was devastating. Let's go out to the fractal chart to understand how to put this all together. Now, before I go any further, let me state that I don't want to convince you that we're into the next bear market. I'm just giving you some historical perspective of what kind of delineates a bear market and how they operate. So you can clearly see that we are through the first phase of that. We've dropped somewhere more than 20% so far. And we rallied up to what is clearly a monthly lower high at this point. Now, we don't know if this is going to continue going on and make a new higher high from here, but right now this is a monthly lower high the way it sits as we are today. And we also have a tremendous amount of energy at the monthly chart, which means that the next monthly swing is going to be enormous. The tank is full. Now we go down to the weekly chart in the middle here. So this is the monthly over here on the left, the weekly in the middle. And what we're seeing is that the weekly chart has got a number of these swings, lower highs, lower lows, and we've transitioned into a weekly uptrend. We've started to print higher highs and higher lows. It's definitely above this monthly lower high right there. So that's good. That's a positive sign that we may be starting to print a bottom. And the way that we would know that is if the price puts in a higher low and then a higher high combination. So that's one thing we're going to have to look for is the price trading above 4,300. And oh, by the way, it's going to be that 200-day simple moving average on the daily chart, which is over here on the right-hand side. So obviously we're in a huge tipping point right now because the larger timeframes, especially the weekly chart, are still showing a weekly uptrend at this point. And those don't just go away overnight. However, rule number 2 of fractal energy trading says that reversals start at the inside out. They start from the smaller time frame. So what we saw printed on Friday was a lower high and a lower low. So we now have a change in polarity on the daily chart to a downtrend. And that downtrend is pulling down. Let's go ahead and clear this so you can see a little bit better. That downtrend on the daily chart is pulling down the weekly chart into a weekly swing. What we've seen, though, is that these weekly swings can, especially in a bear market, can be brutal. There can be no wave action at all behind them. So they can drop like a stone. Remember, stocks take the stairs up. They take the window down. So here's some structure for you to understand what's going on. Now, what I said the other day was I want to see 4,100 hold. And if 4,100 holds, then we might be able to see this price break above 4,300 and continue the uptrend. Okay, that didn't happen. So now we have to go to our secondary thesis for the price action. And that involves the fib retracements. Now, there's a couple of different ways that we can use these. I'm going to take these, first of all, from the most recent swing, which is typically what I will do, and draw that up to the end of the most recent swing. And so you can see that we've gone through that 38.2% retracement. That's the one I wanted to see us hold at 4,100. 50% will probably not offer any support. Where I see the next level of support is down here at the 61.8% retracement and the 39.50 level. So 39.50 is our last line of defense for the bulls. If the price comes down to here and then rebounds, and this has to rebound up to a new high above 4,300, and it may not go there immediately. It may drop like this and eventually rebound up like this. And something would have to happen. There would have to be some kind of positive catalyst to support the market doing something like this. I don't know what that is, and I don't particularly care what that is right now. But to me, this is the only bullish outcome from this would be a drop down to 39.50, which should be accompanied by just incredibly terrible sentiment. At this point, everybody would basically be folding in their cards and throwing in their positions saying the market's done. And if the majority of all the traders think the same thing, then the opposite is likely to occur. And this is why I've seen everybody out there saying, hey, this is just like 2008. This is just like 1982, or, all these other bear analogs, everybody coming out of the woodwork talking about bear market analogs. I was doing the same thing 2 months ago, but now everybody's saying these things. And so it does give me some kind of hope and some kind of thesis here for an upside release. So this is what I call a slingshot move, where the price pulls back really hard and then finds a positive catalyst, and the short covering occurs in a violent fashion to the upside. However, if the 39.50 level does not hold, then especially if the price cuts through here and closes below 39.50, then the market is toast. More than likely, we will see, at the very least, a retest of the lows, if not a closing undercut of the lows. And this is going to look like this on the monthly chart. It's going to look pretty ugly. And so we'll probably do the same thing. We'll probably flag out here for a while, maybe even rally up to the next monthly lower high. And then the ugly stuff will continue. And more than likely, we may do a Michael J. Burry with the price undercutting the 2020 lows. So folks, everything comes down to the 39.50 level to me. That's going to be the important level to watch. And we could hit that level within a day or two this week. What happens in the next week or two will set the tone for the entire rest of the year, and perhaps into the first half of 2023 as well. Watch those price levels and buckle up. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.